If you've invested in Calgary real estate, then you're going to want to pay attention to this video because today we've hit what I'm calling a trifecta of bad news. More supply, softer prices, and worsening conditions across key segments of the Calgary real estate market. Now, before you panic if you bought, or if you get excited if you're considering an investment, I'm going to break down what's actually happening, why it's happening, and what smart investors should be doing right now. So be sure to like this video, subscribe to my channel, and hit that bell so that you don't miss any of my investor updates. Now, let's get into it. So let's start with the overall numbers for November of 2025. Calgary's market usually cools this time of year, but this November was a little bit different. We saw about 1,500 sales and about 2,200 new listings. That helped a little bit, but not nearly enough, because total inventory still climbed to about 5,500 units. That's 28% higher than last year and about 15% above what we usually see in November. And that brings us to the real story here. Supply is rising in almost every market segment. Now let's talk pricing. The combined benchmark price for November came in at about $560,000, which is about 5% lower than last year. And unfortunately, there are no signs of a bounce yet. December in Calgary is historically very quiet, so we're likely not going to see any movement until the new year. But here's the thing you need to keep perspective on. Calgary is still a major Canadian city, and even with this cooling, the fundamentals of the city remain rock solid. Nothing has changed. There's strong population growth, high net immigration, a very healthy economy leading Canada, major federal infrastructure investments that were just announced by Carney, and Calgary is still one of the most affordable major cities across all of the country. So this isn't a crash. This is a normalizing market after years of intense growth. But what does this mean for investors? Well, after several record-breaking years, Calgary is adjusting back to reality. During the last 3, 4, 5 years, there was significant supply, and it was probably oversupplied in the city. And this is going to continue to put pressure on prices until all of this excess inventory is absorbed and bought by the market. 2026 is going to be another record year for pre-construction units hitting the market. So I don't think conditions are going to get any better throughout next year. In fact, I expect single-digit declines throughout the next 12 months, but not in a dramatic way. This is going to be more of a slow, steady slide as that new inventory continues to hit the market. But looking beyond 12 months, what then? Well, 2027 is when I expect the supply to completely dry up. Pretty much all of the developers in Calgary, there hasn't been a new project in over 18 months. And come 2027, the number of new units that are going to be delivered to the market is going to go to virtually zero. And this is when the market is going to reset and a new real estate market cycle is going to begin. So personally, I'm holding all of my Calgary properties long term. The rent that I'm getting is covering all of the expenses, so why not sit on them for the next decade? But if you're not planning on holding like I am, this is your window to sell. Sell right now before more supply comes online in 2026. Don't chase the market down. And for people looking to buy and for an investment, there are no-brainer deals out there right now if you know where to look. And now let's take a deep dive into the different Calgary real estate market segments. So starting with the condo market, it really continues to face the strongest headwinds overall. Sales did return to long-term's norm, but new listings remained elevated compared to last year. The sales to new listings was at a 55%, well below the previous years. And November inventory, this actually pushed up to a record high for the month. Months of supply edged closer to 6 months, firmly in buyer's market territory, and it's been above 4 months since the summer. Days on market continues to rise at 59. That's almost 2 months for the average property to sell. So the supply imbalance has resulted in ongoing price adjustments throughout the second half of the year. The unadjusted condo benchmark price is now right about $309,000. This is down about 7% year over year. And year to date, prices are down over 2%, with the Northeast District seeing the sharpest declines at nearly 5%. This is definitely a trend that we don't want to see continue. Moving to townhomes, the sales eased to 257 units. This is a decline from last year's record-setting November, but still above long-term trends. However, it's the supply where we've seen the most notable shifts. New listings, this stayed pretty consistent with last year, and despite expected seasonal cooling, inventory levels are the highest for November since 2018 at nearly 900 units available. This increase has kept months of supply elevated for the past 3 months, and this is creating sustained downward pressure on prices. The unadjusted benchmark price for townhomes, that fell to about $424,000. That's down month over month and more than 6% lower from last year. And while part of the monthly decline is seasonal, this broader trend is more persistent. Year-to-date prices have slipped nearly 2%. So moving to the detached market, detached sales reached 823 units. This was nearly identical to last year and in line with typical November activity. New listings, well, those pulled back month over month, which helped ease some of the inventory pressure. And overall, detached inventory remains elevated compared to 2024 and some of the previous years, but it's much more aligned now with long-term averages the city of Calgary has seen previously. The months of supply, it remained around 3 months, unfortunately bumping up from October's levels, and this is signaling balanced conditions. But prices, following normal seasonal trends and softening compared to October, the detached benchmark price is now about $733,000. This is down about 2% from last year, but it's still about 1% higher year to date. So that's your November 2025 update. More supply, softer prices, a shifting landscape for investors. If you're thinking about selling, repositioning your portfolio, or if you want help finding the opportunities that are popping up in this market, reach out to me anytime. My contact info is in the description. If you found this video helpful, then make sure that you like it, subscribe to the channel, and share it with someone else that you think might find it interesting. Thanks for watching, and I'll see you in the next one.